Good day. Thank you for joining me for the PSG Wealth Offshore Fund update. Starting with a market backdrop, just looking out over January, we saw a divergence in performance from shares, with developed market equities ending the month lower while emerging market equities posted positive returns. In the US, we saw the unusual and highly targeted trading from retail investors. This contributed to a rise in the risk and market volatility and dampened the appetite that had pushed the S&P 500 higher. In the UK and Europe, lockdown restrictions and the slow rollout of vaccines weighed on the economy. Emerging market equities recorded a positive return as investors anticipated a return to social normality and economic recovery. This was despite the sell-off towards a month end on concerns of a COVID-19 resurgence. Looking at the individual portfolios, what I show here is the global wealth AUM for the offshore funds. January saw a more flat month, with the AUM currently sitting at 1.938 billion. Over the 6-month period, the PSG selected managers have struggled to maintain their consistency against their respective peer groups. However, looking out over the long term, this consistency still remains favorable. For the individual funds, we're going to start with the Global Preserver. For the Global Preserver, the fund's AUM sits just shy of $150 million, split equally between our 5 underlying managers. We've currently made no changes to the portfolio and are still happy with the composition. Looking at the PSG Wealth Risk Radar on the bottom of the screen, you can see a quantitative and qualitative risk radar. As mentioned previously, the qualitative radar, we have Fidelity Global Multi-Asset Income, where one of the portfolio managers, Chris Forgan, has stepped back into the broader organization. Looking at a quantitative risk radar, here we can see 3 funds have appeared on the radar, and they only appeared on the Global Preserver Pound class, illustrating more of a currency impact on the fund. The fund rose 14 basis points in January, outperforming its sector for the month by 31 basis points. The fund is above the sector over the recommended holding period of 3 years and is above again since inception. Looking at the rolling chart, which shows the 3-year rolling relative to the peer group, you can see that the fund has been climbing back nicely in the recent months. The fund currently sits around 81% in the upper half and 81% above the sector average. For the Global Moderate, the fund's AUM is around $131 million, split equally between our 6 underlying managers. As I mentioned, we've made changes at the beginning of last year, however, we still are happy with the current portfolio. Looking at the PSG Wealth Risk Radar, here we can see there are no funds on the qualitative radar. However, one fund, the MFS Meridian Global Total Return Fund, has appeared on the quantitative radar. For the month, the PSG Global Moderate portfolio returned 0% in line with the custom benchmark, also generating a 0% return. The fund is above the benchmark over its recommended holding period of 5 years by 53 basis points per annum and since inception by 13 basis points per annum. Looking at the rolling charts, here you can see that the fund remains well within the second quartile and has remained in the upper half 71% of the time. For the Global Flexible, the fund's AUM currently sits at $770 million, split equally between our 6 underlying managers. At the bottom of the screen, here you can see there are currently no funds on a quantitative or qualitative risk radar and are still happy with the fund's composition. Looking at the returns for the month, Here you can see that the fund rose 15 basis points in January, outperforming the sector average by 9 basis points. The fund has outperformed its sector over the recommended holding period of 7 years and since inception by 6.32 and 6.27% respectively. Looking at the bottom of the screen here, you can see the fund's rolling return. And as you can see, the fund has remained 100% of the time in the upper half and in the top quartile. Lastly, looking at the global creator, and here you can see that the fund's AUM for the month currently sits at $887 million, split equally between our 9 managers. We haven't made any changes to the portfolio currently, but here, as you can see on the quantitative risk radar, there are 3 funds that appear, namely the 91 Global Franchise, Vulcan Value Equity, and Ned Group Investment Fund Global Equity. On a qualitative side, we have Vulcan Value Equity, and the reason for that is James Falvey, one of the principals and PM, will be leaving the firm later on in the year. Looking at the returns for the month, the fund contracted 72 basis points in January, underperforming the sector for the month by 82 basis points. The fund has outperformed the sector over the recommended holding period of 7 years and since inception by 3.3 and 2.4% per annum respectively. As we can see from the rolling chart, the fund has held up well over all periods and remains in the upper half 100% of the time and in the top quartile 85% of the time. As a conclusion, and looking at the peer group rankings, again we can see that the funds have remained favourable across the board, with 5 of the 6 funds having produced average and above performance over their recommended holding period. To tie this all together, here we can see that the PSG Wealth multi-manager team has achieved all of its objectives of consistent above-average performance at below-average risk, while maintaining a competitive price. Thank you for joining me. Please take note of the following disclaimer.